Hello there and welcome to this video. In this video I'm going to discuss qualifying areas of supply and demand and drawing valid areas of supply and demand based on the accumulation candles that the indicator brings to our attention. And I'm going to use the pound US dollar for my example. And so we'll perform quickly our top-down analysis starting on the monthly chart, and then we will have a closer look at some potential areas and qualify them based on some of the rules that we have to do so. Okay, if we have a look here at the pound US dollar, you can see on the monthly chart that price is moving down. We have lower lows and lower highs. And currently you can see price is reacting to something in these wicks here. And my broker is not showing me any more data than what I can see now, and so the wicks here, these 3-month wicks that went lower, is actually the all-time low for me. So this is what I have to work with as basis of for my analysis. So first of all, I'll draw a rectangle in here that looks something like that, because this is all we have. There we are, and you can see that price has tested this area once. So price left the area, it went up, it came back down, it tested the top of this area, and now price is kind of coming back, and now it's kind of eaten further into this this monthly area of demand. Because this is such a huge area, we'll drill down on the smaller time frames and have a closer look. But ultimately, now we want to see what it is that price is reacting on. We can't see, there's no detail here now, so we'll have to zoom in just a little bit on the smaller time frames and see what's going on. Okay, so if we keep our monthly area and we go back and have a closer look at what's going on here, you can see that we have price form this base and it moved higher, and then we had a deep retracement, and then price started creeping higher, and we had some continuation patterns here where we formed this base, which is a child demand, the parent being over here. We can't see what it is that price is reacting on, but we'll get to that in just a moment. And so price left here, it moved higher, accumulated orders, moved higher, accumulated orders, moved higher, accumulated orders, then it moved higher, and then it kind of formed this top, and then price fed back into this. But we want to have a look in here. We want to find the parent demand, which is down here. So this requires to go on an even smaller time frame, and we'll have a look. And here you can see very clearly what's going on. You can see that price moved down. It caused this all-time low in January of 2009, and then price moved away. And you can see here that we have, let me enable some of these bars. We'll put 5,000, which should hopefully enable, yes, now we can start drawing candles. You can see here we had price move down, and we had a bunch of accumulation candles and some sloppy price here, and then price released. What we do is we want to look for the bar where price left the area, and this is the green one here. It's telling us exactly that this is the bar that we want to look at. Based on that, we look to the left. And you say, is this an accumulation candle? It looks like one. I mean, there's no wick, but it's a small-bodied candle here, so we'll assume that is exactly what it is. Then you move to the left and you say, are you an accumulation candle? Yes, I am. And you go to the next one. Are you? Yes. Are you? Yes. So the area could be refined to look something like that. But what I don't like about this is that these are pretty wicky here. So if you go to an even smaller time frame, which we won't do, you'll find there's something else going on in these wicks. But what we'll do here is that we'll focus on this little bar right here, the one prior to the bar where price left. And so I'm going to draw the level from the low to the top of the body of the candle just before the candle where price left. So like that. So it's going to be like that. And you can see that this is where price reacted on its initial move higher. And if we have a look in here, you can see that we had a first release, we had accumulation, and then price rallied, accumulated, rallied, accumulated, rallied. So we had two accumulation patterns here, the first one being here, the second one being here. So we can actually use this to draw another level in, and we'll leave this as a daily level. So we draw from the low. Then you have to ask yourself where this area should be. So you want to find the area that left, the bar that left the area, and which is kind of this one here. Then you look left. Is this an accumulation candle? Yes, it is. And so what you want to do is, ideally you want to put it at the top of the body of the accumulation candle. But if you look a little bit higher here, you can see some clues on this bar here, which is the one that kind of left all of these candles. You can see that the close was above the high of these candles here, the highest high. And so this candle here is telling us a nice story. And so what I want to do here is I want to move the top of this area up to about here, like that, because this is where price touched before it released higher. So this is telling me that this is the limit or the upper edge of this area of demand. And so if we scroll back now to where price currently is, you can see, wow, you can see that price dipped into that area precisely, and now it's moving north. And so if we go back up to the higher time frame, and we look at this for a minute, now you can see that we have these wicks, but we have some refined areas of demand that we've drawn here. And this is the beauty of starting on the higher time frames and then drilling down the smaller time frames, is that you can really pinpoint your areas of like the upper and lower limits of the areas of supply and demand. So this is beautiful. So you go to the daily chart, and we have a closer look. And now we can draw some, you know what, we'll stay on the monthly, and we'll draw some areas here as well. So we have this high, and when price left this high, we had a continuation pattern. So it left, accumulated, and then moved lower. And so this here is the area of supply that moved below this low and this low here. So we want to draw something in here. So we'll do that, maybe something like that, roughly. Let's do it like that. And you can see that this is actually a child supply, the parent being the one just above. So if we add another area here, we can take it from the high to the this is the candle that left, then it moved lower here, accumulation, and then lower, and so we can draw it from the high to the low of the body here, which would look like that. So we have these two areas at the top here like that. I think that's fine. You can see here's another clue again, how this candle that broke away, that managed to close below the lows of these candles, when it came back, it touched the area here, which is roughly the 156.34-ish area, probably the 156.50-ish area, and then it was rejected, and then this is where we got the accumulation pattern from. So now we go down to the smaller time frame, and we do the process over once again. So now we can refine things a little bit more. We can see we have monthly supply here and here, and then down here we have the upper edge of monthly demand. So currently we have monthly demand driving price higher. And then we can look a little bit closer, and we can see that this is supply because it took out this low here. I mean, ultimately you want to validate areas of supply and demand based on the degree of strength that they have been able to show. So if they are able to break a market structure such as trend lines and things like this, then they are exhibiting strength and follow through. Additionally, if you have an area of supply and demand that is able to consume opposing areas of supply and demand, then this is also showing commitment and strength. And so you want to find the areas that are showing a great deal of strength. If we look at this one here, for example, we'll just insert an area here. When price came up here, it moved up. We accumulated orders for 2 weeks, and then price left very strongly. And we had two extended candles away. It went push and then push. Then price formed the base, and then it moved higher, and it dipped into this area like that, and then we got a rejection, and then price managed to push through it. And so this is a really good area here because it showed strength. Price was able to leave the area, and it accumulated orders away. You can see this black space here, and then it came back. And on the first approach, it managed to almost consume the entire area. On the second approach, it held into, and then it finally moved through. And so this area here of demand is indeed demand, because when price left here, it took out this area of supply. So now we can move this to here. So this is the area of demand that is in control, assuming that none of this exists here. So where did price react? It reacted to the area of demand that was able to consume this supply. So this is a great level, and as you can see, price respected it very nicely. So it was tested once, and we established this child demand, the parent being this one, and when price left here, it managed to take out the high and this area of supply over here. So we can draw another area, which we'll do quickly, from the low to the top here, and let me update that, and then this is where price came down to, and it came up and it held away, and then price finally dug through it. It kind of moved through it. So this area we will now delete. And then you have to ask yourself, what area of supply is responsible for consuming this area of demand? It's this one. Let me move these out of the way. It's this one just here. This is the one that moved through this child demand and stopped at the parent. So we take our tool and we draw that area off. So from the bottom of the body to the high. And why the bottom of the body? Let's cover that quickly. So we have the green candle that leaves the area, and so this is where everything started. This is where the move started. Then you have to go to the next candle next to it, and you have to ask yourself, are you an accumulation candle? Yes, I am. Then you do the same thing. Are you an accumulation candle? No, I'm not. So the analysis of the area of accumulation stops there, and the area will encompass the bottom of the body to the top of the extended range bar, or whatever is highest. So the highest bar here. So it's from the bottom here to up there, like that. Then price reacts on this weekly demand. This is a second test. And where does it come back to? To this area almost to the pip. And then we have another attempt at taking out this area. We almost go through it, but it manages to hold. And so price comes back up here. It touches this area of child supply. We'll remove one of these so it's not so cluttered. And this is an area of supply because it went lower than this low. And where does price react at? At this child here. So this is beginning to show a pattern here. So we have valid supply, which takes out this demand, which qualifies this. Price comes up, tests it, it rejects, it takes out this low. Price comes up and takes out this area of supply, which was qualified because it took out this low. And this is not an area of demand. This is just a reaction to this demand here. Nonetheless, price comes up, respects the area, and then it moves through. And so if we move this for a second, you can see that when price left this area here, it managed to move through this area of demand. So we can draw a new area just here, and this is a good lesson here because we have our candle that caused the break of this area of demand. Let me delete that. And then you have to go to the candle to the left. Are you in accumulation bar? Yes, I am. Are you in accumulation bar? Yes, I am. Are you in accumulation bar? Yes, I am. Okay, so the area, sorry, are you accumulation bar? No, I am not. And why is this not an accumulation bar? Well, you can see how the body of this candle is within the range of this candle. The body of this candle is within the range of this candle. The body of this candle is not within the range of this candle. So this area's shape and size stops at this candle here. So the area would go from the low to the high like that. Right, and then what happens? This area of supply is responsible for taking out this area of demand. So now we remove this, and then price moves below. Where does price come? It comes back to the area of supply that took out this demand, and it moves lower. We have rejection. Price moves lower, so when price leaves this child, so when it tests this child supply, we have a test. We form another area of child supply. Why is this a child? Because this is the older sibling up here. So this is also a child. This is the younger sibling of this one. This is the younger sibling of this one. And this is the parent. So this is the parent, and we have 1, 2, 3, 4 children. And then it moves lower. So it qualifies this area of supply because we are strong enough to move below these lows. So we can draw another area in, like so, from the high to the bottom of the body there. And so let me remove one of those. Okay, and then price comes up to this area here, respects it. Why? Because it's strong. And then it just disappears. Then it falls away pretty aggressively. And now price has moved to this area that we had a look at earlier. And this is where the fun begins, because now we are approaching current price. And remember, we're on the weekly chart here, so we'll continue doing our analysis. We'll remove these areas up here because they're pretty far away. But we'll use this one here to, we'll just draw a new one. Our price labels have gone there. Okay, so we have this area here. Okay, oops. This area here that has now been consumed by something in here. So you can see that the first test was from here. This area of supply came down, and then the whole area was taken out by this little continuation pattern here. So we can remove this, and we'll move it. We can take the whole bar because it's a pin bar. We can do that. And now we have at the 14800 area, this is the area of supply that is responsible for taking out this demand. So this shows some strength and commitment, and this is really nice because this is a parent and an independent area of supply, because it's not a reaction to something else. Not like this one. This one reacted to this one reacted to that. So it's kind of, these are like linked together, they're chained together, they're using the same family. But this is just an independent area of supply, and it's apparent because it's not reacting to anything. And then price went lower, so we're reacting on something probably over here somewhere. Then price came higher. Didn't quite get up here, but it's reacting on something in here. So if you go to the daily, there's probably something in here that's that capped price. Then it moved down here, and now we had a very strong rejection. And so now price is beginning to creep higher. And so what we want to see is, we want to see this area of supply to be consumed by the order flows. And once that happens, then you want to find out what area of demand is responsible for consuming this. And you also have to remember that we have a very significant demand at the bottom here, which is currently driving price. So this is actually, we have the monthly at the bottom, we have the daily just above. And so this is what we're looking at. So price is being driven higher now. And so the area we would expect price to react at is maybe something up here, or if you drill down to a smaller time frame, maybe something up here. But you can see here that we have an area of supply here. Why is this supply? Because it moved lower. So we can draw an area in like here. We'll stop there for the time being because we'll analyze this area. So you can see this is the area. This is the bar that left the area. Then you have to go to the bar before. Are you an accumulation bar? Yes. Are you an accumulation bar? Yes. Is the body of this candle within the range of this candle? Yes. Is the body of this candle within the range of this candle? It is. So we can draw this area like this. Like that. And so you can see now that price is currently reacting at the bottom of this area, which is the 14400 area. And notice that you'll often find that the edges of these areas are very often round numbers or big figures. So that's quite an interesting observation. You can see here that we have the more aggressive stance, which would be to have the area at the bottom of this area of supply down there. But you can also move it to the candle just above, which is up here, which would be a little less aggressive. And this brings us up 80 pips to the 144.80 area. So this is something to watch out at. And this is, of course, a weekly supply, so this has a lot of clout to it. So you can see price is currently reacting, so we'll have to see what happens. But you have to be mindful of the fact that we are reacting to monthly demand at the bottom. And we have a nested daily area just on top of it. So there's a lot of buying pressure at the moment. That said, we have some very significant areas of weekly supply just up here that price will have to move through in order to continue moving higher. But when these are consumed, when these are taken out by the movement of price, this will qualify areas of demand as price begins to move higher. Good. I hope that makes sense. So now I want to have a quick look at drawing areas of a supply and demand manually based on these candles here. So if we have a look, let's start our analysis here. You can see here that we formed this top. When price left, it moved away very quickly. So you have to find the candle that broke away. Then you have to find the source of the move, which is just here. Additionally, we're on the daily. You can see that we could draw a daily trend line, which is like that. Moved higher, and this trend line was broken. Then you have to ask yourself, what caused the break of the trend line? What caused the structure of the market to break down? It was the supply up here. So this qualifies the area, excuse me, just up here. So we have something like that. And you can move it down a little bit because we have, as you can see here, we have this is accumulation bar and another one, and these are all within the range of each other. And this is the first one here that moves away. So you could actually draw the area from the top to the bottom of this bar here. And this is exactly where price dipped into. So when price comes back like this, it's kind of telling you where the edge of the area of, in this case, supply is located. So just keep an eyeball on that. So I'll go over this once again. Price left here, then you have to look at the candles that caused the move lower, the break of the trend line, the move below this low and this low here. So we have this candle here as a source, we have this one here, and this one here. These are accumulation candles, and these are all connected because the body of this candle is in with the range of the previous candle, and this is the first one here that sticks out, that kind of breaks below. So the head is shaped like that, just like that. So we have daily area of supply qualified. So we have a trend line break, and we also have opposing areas of demand that have been consumed. So the first one being here, which you could see it's been taken out here. Then you ask yourself, what took it out? It was this one here, which qualifies this. So this is a whopping level just here. So we'll remove this one because that one's no longer there. And so you want to be selling around here. Right, that brings us to the next one here. This is the reaction to this. Did this area manage to show a little bit of follow through? Well, yes, it certainly did. So what we do is we look for the green candle, which is a move away. Then you go left. Are you an accumulation candle? Yes, I am. Are you accumulation candle? Yes, I am. But the body of this candle is not within the range of this candle. And so this is telling us that we have a continuation pattern inside this. So this is telling us to go to the 4-hour chart and have a quick closer look. But we won't do that. We will simply draw the level like this. We'll just take the one at the top, which is like that. And this is where price is reacting. There we are. So this is where price is reacting. We could actually take it to that one as well. That's fine. This is exactly where price is reacting. And then price moved away. And so price came up. Excuse me. We had a relatively long period of agreement in supply and demand here, which is not good. And then price slowly moved away. It came back, and then we had the shorter period of agreement just below, and then price fell away. And this is lovely. This is a really nice, strong muscle flexing push and display of strength. So this is a nice area. So we have the candle that moved away, and you ask your questions. Are you an accumulation candle? Yes. Are you an accumulation candle? Yes. Are you an accumulation candle? Yes. Okay. Is the body of this one within the range of this one? Yes. Are you within the range of this one? Yes. Good. So now we can draw our area from the high to the bottom of the body there. And price has not been back yet. So this brings us to this next one here, and you can always see who's in charge because we had two candles. It took two candles to move price that far, and we had 1, 2, 3, 4, 5, 6, 7, 8, 9 candles to retrace a portion of that one. So we have a very clear downtrend on this pair at this stage here. So price is reacting here, and we move away, not very aggressively, but we form a top, and then price sells off, and it takes out this low, which qualifies this area of demand. So we find the green candle, then you look left. Are you an accumulation candle? Yes. Is the body of this candle within the range of the previous candle? No, it isn't. So this is going to be the bottom of our area of supply. So we'll draw that in from the high to the bottom there. Where does price come to? To the pip. Yeah, it's super simple. It's not rocket science. It's just a matter of finding these levels and drawing them properly and asking yourself these questions, and do it out loud. Make a recording of it and ask these questions out loud, and you'll find that you'll be mastering this in very limited time. Okay, so you can see that price is left here. When price left here, it moved away. And then we have the green candle here, and this is the one that closed below the lows here. So, are you an accumulation candle? No, but it's kind of similar. Are you? No, kind of similar. But this body is in the range of that one. This body is not within the range of that one, and so this area would be like that. Something like that. I'll remove one of these so we only have one. This is an interesting level because when price left, it really moved away. So we had a sell-off, accumulation, sell-off. And you can see that price reacted to something in here. So this is telling us that in this little base here, we have 4-hour demand. So we can go to the 4-hour chart just to have a look. We can find all these. Yeah, here we are. So this is the area here. This is the 4-hour demand. Why is this demand? Because price moved down. It was an agreement for a limited amount of time, and it moved higher, which took out this high. So we can draw a 4-hour area of demand from the low until the high of this body, which is about there. So price kind of almost came to it there. If you include the wick, I think you'll find that it kind of took it, yeah, to the pip. Then it moved up. We had an rejection, accumulation, rejection. When price left here, it managed to move above this high. So we formed this, and now we're moving lower. and you can see that price managed to cut through this and move this. So this 4-hour demand is now gone. But you can ask yourself, okay, what area of supply took out this demand? Well, it's this up here. Initially, this is the continuation pattern, the parent. Then we had another one sell off, and so it's actually this area here that's responsible for doing that. So if we remove that one and we draw this one in, we'll go like this from the bottom of the bodies to the high. Yeah, and this is where price came back to before it moved lower again. So you keep doing the same thing over and over again. Then you have this stuff, which is kind of difficult. It looks a little bit difficult, but it's not that difficult after all. You just have to pay a little attention to the green candles. So we have really slow push higher, test this supply, then price managed to sell off. So we have a sell off, accumulation, sell off, then accumulation, and then price dropped. And when price left here, it moved below this. And so we had a reaction there. This is not pretty supply and demand at all here. So this is probably something you'd want to trade on the hourly chart, because it'll probably be a little bit clearer. You can see these swings a little bit clearer. See, this is it on the hourly chart. Excuse me. So we have the candle that moved away. Unit accumulation. Is your body within the range of that one? Yes. Yes. We have a lot of that stuff going here. So you could draw from the high to the low of the body here. Oops, that's a little bit too wide there. And this is where price came to. And rejected, and it moved lower. And now we have this area, which is nice because there was a very short period of agreement in supply and demand here. So we'll mark that off as well, like so. Oops, a little bit lower, like that. Then we had price selling off. It's moving down. We have the same thing here, where we had kind of price left quickly. Price came up, fed into this area, and rejected. What caused the break of this? It was we had a sell-off, accumulation, sell-off, accumulation, sell-off. Then we had a long period of accumulation agreement. Then price jumped up. And so the imbalance started here, which is what price reacted on. Then price is moving lower again. So we have this one here, which is nice, which is still untested. So we'll draw that in, kind of like that. And then price is moving lower. Yeah, and it keeps going. And then we have to find some areas here. So price is, okay, so price is here. So we had the area of demand that took out, took out this supply. We have to find that. We have that. The area that took that out is here. So we have this area here, which is apparent, is independent, because it's not reacting to anything. So this is powerful. So price left, touched it, moved higher, and then it moved higher again. So we can draw another one in here. And then price managed to move through this one, so this one's gone. And then you see price reacted here. So this one's actually gone, so I'm just going to delete that. Let me get it back from here. This is gone. And what was it that took out that area? Well, it was this. So we had let me go to the 4 hours so we can look at some more significant areas. You can see that it was this area here that took it out. So from high to low, and this is what price reacted on the 144.20 area. See, this one here took out this, and it moved below. So this one is now gone, and now we have this area up here that price is currently contending with. We have this nice continuation pattern where we have a rally, accumulation rally. So we dipped into this area here, and so now we can begin to analyze this area of demand as it moves. This area of price movement on its way up. So we do the exact same thing. So we form this base, so we'll mark that one off as kind of like the bottom. Green candle, like that. You'll learn to do super fast after a short amount of time. So we have that, and then price left. Excuse me, we have this small area of demand here. So we go like that. The price touched it once, twice, 3 times. So this will not probably won't hold next time. Then price left. It accumulated, and it went up. So we have another one here. Looks something like that. Oops. And price has not been back, but we had this one here, and this is demand because it managed to move above these highs. So we'll just mark that off. So from here to there, and it was tested once and twice, so this likely won't hold on the next approach, but when it touched the second time, price flew up, accumulated, and then flew up again. So we've stabbed into this here, which is a pretty nice area, and we'll have to see what happens. But currently price is reacting off this, but it did not take this out. We want this to be taken out before we start. If price would have moved through this, then you could buy here, but we're having a reaction here, so it's probably best to wait and select something down here. So potentially something like this, and this is an okay area because when price left, first of all, we have a very nice candle, but when this left, it moved through all of this. It took out all of this micro supply and demand. So the area that I think would be quite interesting would be potentially this one here, but not this one here because price is reacting on here. But we'll have to see. Maybe we'll get a bounce here and a test and then move down. But you can see these are pretty wicky here, so these aren't all that interesting at the moment. So if you go back here, you can see we've worked. We have all these areas marked off, and that's how you do it. You start from the top, from the higher time frames, and you work down. And when you need some clarity, when you have kind of like long bars or pins, rather wicks, then you have to go to a small time frame to get some detail so that you know what's going on in there. And then you can mark these levels off, and then the story unfolds before your eyes. Good. Well, I think that I will leave it at that. If you have any questions about either the process or the software, please don't hesitate to let me know. Thanks for watching and have a lovely weekend.